I've been getting a lot of questions and emails regarding the fundamental analysis spreadsheet, so I'm going to get into it in a second. Really, how we use it to have a fundamental edge, and this really simplifies the fundamental analysis process. So before I get into it, fundamental analysis is more than just trading individual data releases. I'm sure you're probably aware that sites like Forex Factory that release data, traders tend to want to go to these types of sites, and then they'll trade the news. If it's positive, they'll press buy, and if it's negative news, they press sell. And if only trading was that easy, we'd all be millionaires, right? But obviously something isn't working. You know, traders are getting very confused. They don't know what news to trade, and they're disillusioned with the fundamentals. And it's commonly taught, you know, that this is fundamental analysis, and when it doesn't work, then basically traders throw the fundamentals out of the window pretty much. So it's not this, and I'm going to show you really how we trade fundamental analysis using the fundamental analysis spreadsheet. So as an overview, we need to understand currency's exchange rate value. Yeah, so a currency value. We're trading currencies in pairs. Yeah, so we need to understand a country's strength or weakness based off of really three main things, and some other things as well. But the three main things are GDP, interest rates, and inflation. And what we do is, those are some of the markers, macroeconomic markers used on this on the fundamental analysis spreadsheet, and a few others. And what we do is we rank the countries in terms of cumulatively. Yeah, so on the right hand side we have the spreadsheet, and we can see the current position at the moment, right? So current position, and we have the past position. And the current position, we have Australia, which is number 1, New Zealand, which is number 2, number 3 is Japan, number 4 is Canada, number 5 is joint 5 is Switzerland and United Kingdom, and joint 7th place is the Euro area and the United States. So 1, 2s and 3s and 4s, what we would consider the stronger currencies. 5, 6, 7s and 8s would be considered the weaker currencies. So it's pretty much now a no-brainer on how we decide to choose our currency pair. So we're choosing 1 versus 8, 1 versus 7, 1 versus 6, because Australia at the moment is the strongest, and the United States, you know, in the Euro area are the weakest. So it's a no-brainer to buy the Australian dollar over the Euro area and the United States. That's what we're doing. And we can see the previous position on our fundamental analysis spreadsheet. So what we're going to really kind of get into is just looking at, I guess, the back testing, some people would call this, of what the fundamentals have, the effect of fundamental analysis spreadsheet has had really on price. And price is driven by fundamentals. Price is driven by 3 things: fundamental analysis and value, that's 1; risk sentiment, which is 2; and liquidity, which is 3. Everything else, price action is not king, because price is manipulated. Price can be manipulated, and it's manipulated every single day. So its price action is not king. Price is driven by liquidity, risk sentiment, and value, determined by the fundamentals. So let's take a look at the dollar, for example. Let's take a look at the dollar. And before we do, let's look at the current position and the previous position. And in the previous position, the dollar was actually, you know, top 3, right? So we want to trade 1, 2s and 3s. So number 1 was Australia, number 1 as well, joint first was New Zealand, and then we had in 3rd place the United States. So it was pretty strong, right? And then current position, right? So previous position was that, and the current position we had 7. So obviously the United States has got weaker over time, and look at what has happened to the United States dollar over the past, you know, 3-4 months since April. Yeah, so we've seen what Dow Jones dollar index, which is a measure of dollar strength against major currencies like the euro, the yen, the pound, and also the Australian dollar. You can see what's happened over the past, few months. We're now in July. I think today's July the 3rd. Yeah. So you can see what's happened. And it wasn't because there was a pin bar at a level of supply. It wasn't because there was an engulfing candle at a level of resistance. Price is not driven by any kind of indicator, not at all. Yeah. Or price action is driven by value, right? And an exchange rate monetary policy by the central banks to try to control prices, which is inflation, really. So the smartest guys in the room talk, and they usually want to potentially cut, hike, or hold rates, and depending on what they do in their interest rate cycle, that is really what starts to affect the currencies, among other things. So you can clearly see one of the rankings, but let's look at a couple more examples of price and fundamentals, or fundamentals that are driving price. So as I mentioned before, the Australian dollar has been number one. So let's get into the Australian dollar. So the Australian dollar in the previous position, was number one, and it has remained number one for a fair amount of time. Yeah. So whereas the euro area was number 5 previously, and it got weaker and went to number 7. So what do we see on the euro Aussie? So euro is number 7, Australian dollar is number 1. If you want to buy the Australian dollar, the quote currency, look at what's happened again from the beginning of the around the beginning of or mid-April, right? You can see the clear downtrend, because of the fundamental analysis. This is what is king. Let's look at another one, New Zealand dollar versus the Canadian dollar. And what we've seen is the Canadian dollar was previously number 8, it was previously weak, and it strengthened over time, become number 4. But the New Zealand dollar was number 1, and it's weakened slightly and gone to number 2, but it's still stronger than the Canadian dollar. So you would think that the New Zealand dollar would do what? Increase in value against the Canadian dollar in an exchange rate. And what have we seen again since mid-April? We've seen a nice uptrend, because New Zealand dollar number 2, Canadian dollar number 4. On to the next one. Let's look at the pound versus the Aussie. Pound Aussie. Pound went from number 4, right, so number 4 down here, and slightly weakened to number 5 right here. And obviously we know about the Australian dollar staying and remaining number 1, and then look at what happened. Look at what's been happening over the past few months. A downtrend, typical downtrend. So really the fundamental analysis spreadsheet, and what it does for us is it gives us really a fundamental edge. Is it perfect? No, I'm not saying that it's perfect, because we have to also take into account risk, sentiment, and liquidity. Markets don't go up or down forever, but what we can do is pick our trading directions based off of what's likely to happen, because this is a probabilities game and things do change, but it's a probabilities game. Is pick our direction based on what's likely to happen, and then we can simplify our trading directions and only take either demand or supply zones in a downtrend or an uptrend, and it makes things a whole lot easier rather than buying at demand and selling at supply. If you have a good indication that there's going to be a trend in the future based off of currency strength and currency weakness, and indicated on the via data as well, this is not just guesswork, this is the actual data, then all we need to do is, if you're looking for an uptrend, is look for pullbacks to demand zones, or if you're looking for a downtrend, look for pullbacks to supply zones and get short. So the fundamental analysis simplifies the fundamental analysis process. Yeah, we just look at this and then we say, okay, this is what we want to, the trade that we want to, the direction that we want to take, right? So we can determine our trade directions using current and forecasted data, right? So we looked previously at the current and previous position to show you what was happening previously and what's happened over the past 3 months. But what we also have is a forecasted position as well. So we can look at the current position and actually determine what's going on potentially in the future. Maybe the Australian dollar may continue to be strong, or due to certain forecasts, if they become correct, forecasts are never 100% accurate, but let's say the forecasts do come out as close to accurate, the Australian dollar may want to fall from grace. It might go from maybe 1 to 4 to 7, etc., based off of certain forecasts. So then we can start to potentially short the Australian dollar and short strength, because something may be, rather than buying a bargain, the Australian dollar actually now might be expensive at the highs. Yeah, so we can determine our trading directions using current and forecast data, and forecast trends, and also ranging market states. Ranging market states would be driven by 2 maybe strong currencies or 2 weak currencies, because the market doesn't know which one is the strongest, which one's the strongest or the weakest. And so what you tend to have is, if you have 2 even currencies on equal footing, you get a sideways moving market. When you have strength versus weakness, then you have a trending market. And it also keeps you in trades for longer. So you don't have to exit your trade based off of your unrealized profit. If you're in a really good trade and the forecasted position remains in your favor, then why not ride that trend for as long as you can, rather than just taking these 1-to-1, 1.5 to 1 type trades? Why not go for the 1 to 10 trades, or 1 to 15, or 1 to 20 type trades? If you're buying at bargain, if you're buying at a value, and you're at the beginnings potentially of a really good trend. So you can access the fundamental analysis spreadsheet for less than £1 a day if you go to trading180.com. And if you have any further questions, just email me at info@trading180.com. You can also get access to the free supply and demand trading course, where I go over the daily supply and daily demand zones, how to identify those, something called a strategy called capture pain relief, as well as stop hunting. It's all free, all at trading180.com. All you got to do is sign up for that. So guys, take care, and I'll speak to you soon.